Well, welcome everyone. It's Rob. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in that chat box so I know that you can. I would greatly appreciate it. Afternoon, Brenda. Thank you, Jeff. 1 PK. Okay. Hey, Robert. Afternoon, Kevin. Hey, afternoon, Erica. Thank you, Lee. All right. As we do get started here, keep in mind that everything we look at is going to be on camera in a second. For educational purposes only, nothing's meant to be advice or recommendations. If you like something that you see here today, anything, doesn't matter. Make sure it fits your own personal risk profile or risk tolerance before ever taking on that trade, that setup, or that indicator. All right, a lot of happenings this week in Wealth Builders world. So October 16th, which is, let's see, that's today. 7 o'clock is the Inner Circle. Trading You Live is today, 8 o'clock. I'll be teaching 2 hours tonight. And then October 21st, 9 a.m. That is a Saturday. That is this Saturday, right? I just saw the email got put together. I asked my team to send it out to everybody that is subscribed to Trading You Live 2.0 to let them know what the schedule is for this upcoming Saturday. You know, it's a great opportunity to be there. And let me just lower this volume on this phone here so it doesn't keep going off. It's a great opportunity to come and hang out with all of the specialty coaches and the strategies and techniques that they use. But I wanted you to see what the schedule is. It basically will be one coach who'll go up for an hour. We'll have a 15-minute break, and we'll bring the next coach up from there. Somewhere in the middle, we'll take a 30-minute lunch break. So it's not where you're trying to run into the kitchen and grab something real quick and come back. And we'll hold the best we can to that schedule, of course. We may go over a little bit, may go shy a little bit, whatever it is, but we'll go as close to that schedule as we can. But we'll get that out to you this week so you know what to expect for Saturday. Mastermind group coming up on the 17th. That is mañana. October 18th is Wealth with Spreads Q&A, and then Covered Call Q&A coming up on the 19th, and that is with Mr. Trip Sawyer, his first foray into teaching live. So I'm excited. Well, that's not really true. He teaches Mastermind, he teaches Inner Circle. His first time with Covered Call Explorer. Power Hour and Training Coaches Playbook are on regular schedules. Trade Like a Pro with Brandon is coming up on the 19th, 25th, and 26th. Make sure you are there, right? Power Option Plays, Covered Call, E-mini Vegas Spread. They're on their regular schedule with the exception of this week, and it will be next week also. I will be teaching Pop not on Tuesday, but on Thursday. I will be doing the recording for it. Both weeks I am out for my 2 masterminds, my business masterminds. Both come right at the same time this month. So they're literally back to back, 1 week to the day apart from each other. So on Tuesdays, I will be traveling. So I will not be able to get the video done. My events are on Wednesdays and Thursdays. So I will get it done on Thursday when I get back here Thursday. I'm back Thursday afternoon because Friday and Saturday, do we have that on? We do not. So that's not. I don't remember which week it is. We've got Inner Circle Live coming up, which is, let me go look real quick, which is our full day. That is next week. Okay. Lee, let's go ahead and get that on our PowerPoint schedule going forward. That is coming up on 27 and 28. So let's get that on there now for, on the next one for Inner Circle. So it shows the full day. That is a Friday, Saturday. We do a half-day training each day live, right? So on and upward. Here's our followers page. Make sure you follow along with the various platforms out there. Keep up with everything that we're going through, folks. I mean, if you want to know what we're doing, this is the best way to do it, is to keep up with us here. Sean and I sat down on Thursday of last week, laid out an entire process of things that we want to start adding to social above and beyond what we do now. So I'm really excited for that. You'll be seeing that over the next couple of weeks. Lots of congratulations coming through on Trip. Yes, Erica, Trading You is tonight at 8 p.m. Right? So that should be, what is today, 16? Trading You Live, 8 p.m. Right here. So that's there. Okay, well, you know what? I'm going to bring that up in a little bit, Erica, in a topic anyway. So we'll kind of cover that there. I'll use, you like that? The 2 Youds. Does anybody know what that movie that's from? The 2 Youds? What's a Ute? What's a Ute? Anybody know where that's from? Drop it in if you do. Just curious. So yeah, we do have that for this evening. There you go, Robert. You got it. First one in. First one in with it. Yep. So a couple more, you picked it up. I'll tell you what it is in a minute. So for those that are typing, I'm not kind of messing them up. So what trades did you do today? Drop those trades in, whatever it was, drop them in. And it is My Cousin Vinny. I think a bunch of you got in there already. So My Cousin Vinny was the movie, Fred Munster, right? The judge asked the attorney what he said, the two Utes. And he said, what's a Ute? And then he said, the two youths. Brooklynese, baby, Brooklynese. What trades did you do? Drop them in, folks. Let's take a look at what you did out there, right? As we're getting ready here. So here's our Trading Boss Manifesto, right? You can download this both on tradinglikeaboss.com and on our homepage. And of course, we've got Trade Like a Pro. Guys, discover how a hedge fund trader trades futures. This is the way Brandon does it. This is what Brandon does. You guys want to follow along with this. Do not miss out on that. Oh, I don't want to show that just yet. All right, let's see what we got here. Let me bring up the charts. And let's see. John said, Wheel of Fortune, Roku, Naked Puts, and Lift. Cash flow, $1,200. Good job, John. Erica said $1,277 on SPY and $199 in the Qs. I'd been practicing covered calls on X, which is US Steel, and did really well last Thursday. Yeah, listen, I like US Steel. We talked about this in one of the trainings in our mastermind training last 2 weeks ago, maybe it was, where I talked about, this is a great candidate. It's one that I would show in Covered Call Explorer whenever possible. They popped up all the time for me. So I like it. So good job, Erica. Jeff said currently in a SPX bear call spread. Nice. PK said SPY, $200. Qs, 4 contracts, $100. MasterCard, 2 contracts, $30. NVIDIA, 1 contract, $45. Nice. That's $375 for today, PK. Not bad. I mean, so realistically, where is it? Every computer is different. Some have a key for it on the board, some don't. If you make $375 a day times 5 days, for some of you, that'd be $1,875. If you multiply that by 52 weeks, that's $97,500 that you will not pay FICA, SUI, or FUI on. Right? State, federal, none of that. So none of it. You're not paying on that. All right. So now add another 25% on top of that. You're at $1.25 a year for salary. All right. So, I mean, whoo, it adds up, baby. It doesn't take much. If you make $100 a day, come on, just 100, and you do it 5 days a week times, so it's 500, right? Times 52. $26,000 a year, an extra $26,000 a year, right? Now, all you have to do is double the number of contracts, and you're at 52,000. Well, Brenda, you're still going to pay tax based on ordinary income. You're still going to pay tax on the monies, but it's not going to. You would pay that if you were trading and working at the same time. You're going to pay that as well, right? Robert said 252 trading days per year. There you go. Or you do it in a Roth and pay nothing on it. Exactly. Life-changing money. Oscar, you're not kidding. You're not kidding. It literally is life-changing money, right? It's funny. The Trading You Live 2.0, which is a brand new training. Rick, who's one of our Inner Circle students, has been since the Inner Circle started, basically. He was in the very first trainings that we did for that. I've known Rick now for almost 15 years. As a student, we've become very good friends. And he was in the Trading You 2.0 the other day, right? The live training that we're doing. And he typed a message in, and I read it out loud that said, I'm going to paraphrase it, right? But basically said, Rob, it is awesome for what we paid. And there's so much new stuff in the manuals that wasn't there before, and the depth. And that's what I'm really hearing from students is the depth and how long we're going into things and so forth. Lee, do me a favor, drop that link in for Trading You Live. Guys, go ahead and jump into the Trading You Live. And here's what I will tell you. Lee, just make note of this and send this to Suzanne, okay? That if anybody registers for this today, by the time we're done with Power Hour, I'm not running this on beyond that. So if you listen to the recording for this later, it's gone. Anybody that jumps into this today and takes advantage of the Trading You 2.0, you've got all the recordings that are in there. You have the next upcoming classes, including this week's Saturday class that you could get in and do nothing more than watch Brandon, Ryan, Tony, Amelia, Tripp, Sean, right? 6 coaches in there, a full day's training, right? If you register for Trading You Live and decide it is not for you after Saturday's class, I'll refund you money, no questions asked. Period. Right? Go dig into the 6 or 7 hours of training that I've already done. I'm doing 2 hours of training tonight. We're doing 8 hours of training on Saturday. There's a ton of content out there. So if you're interested, go ahead and click on that link that Lee just dropped in. If not, don't click on it. All I can tell you is you've got nothing to lose and everything to gain. Okay, so Robert said, do it in IRA and you don't need to worry about the tax laws on the trades, considering that today is tax deadline with extension time to file. See, so that is where my Thursday and Friday, part of Thursday, all of Friday, and a little bit of Saturday were spent, was getting all my tax stuff done. I had personal and one entity, one corporation that had to be done as well for that date. So I got all of that stuff done. I know exactly what it is. I hate it. I hate it. I hate it. I have a new assistant that is a QuickBooks expert. So we are going to get QuickBooks online for her, and she's going to do all of this for me, and I will not have to worry about any of this stuff any longer. Had to do mine too, Jeff said. Do me a favor, Lee, help Gwen out there if you would. Yeah, Oscar said, Trading You Live class has been wonderful thus far. Very happy I joined. I'm glad. I appreciate that, Oscar. Thank you. Yeah, so a lot of people doing their taxes. So Gwen said, hey, Rob, which is better, trading in my name or in an entity such as a trust or an LLC? The answer is yes. You really got to think about how you want to handle that, Gwen. And the reason I'm saying that is when you switch over to an entity, you are now paying professional fees. So instead of $1 for NASDAQ, you're paying $200 or something a month for NASDAQ, right? For your professional fees. So it is a lot more expensive from a fee standpoint there. But one of the ways to do this, you know what? Here's what I'm going to do, Ben. Just for you. Everybody else can leave now. No, I'm kidding. Here's what I'm going to do. Our topic today was the best trade for newer traders to use. I'm going to take that topic and we're going to reuse it for next week. Lee, make note of that, please. We're going to redo this topic again for next week. Instead, I'm going to spend some time on entities today. Right? And talk about trading as an entity, costs, how you offset the costs, and so forth. Right? Jeff said, TAS has a way to not pay professionals in an entity. Yeah, and there very well might be, and I need to know that, Jeff, because I'm not sure how to do that there. But we'll spend a little bit of time as we get through our candidates and all of that. We get into the education section. You'll see the best trade for a new trader. As soon as we get there, we're going to talk entities. I'm going to lay a structure out. And this, I am by no means, and I'll say this again and again, a professional when it comes to this. You are required from me to check with your own accountants, attorneys, professionals that know what they're doing here. I do not have license to tell you what to do. I can only tell you some strategies and techniques that are used out there by the wealthy and ultra wealthy to offset some of the risks, taxes, deductions, and so forth. Okay. And I'm going to tell you the number one deduction that most companies and or individuals never take. Well, it's more company, but the individual gets the benefit too. Never take. And I'm going to tell you the number one deduction that you should never, ever take. Right. And this is not from me. You're going to check with your accountants and your attorneys. This is from my attorney / accounting firm that we use to do our stuff. So let's see. Hey, Ed, not sure why you have no volume. Can you hear me now? Okay, good point. Robert said, talk to me tomorrow about how to do that with TAS. Remember, tomorrow night, I will be in Chicago by O'Hare Airport. Robert and I are going to hook up. We're going to either wind up at the hotel where I'll just shuttle over to the hotel and we'll eat at the hotel. Or if there's a restaurant in the area, Robert knows better than I do for that stuff. But anybody that is in that area and wants to come, and we got a lot of messages and calls from people saying, okay, so tell Rob to come to my state next. I want to come too. You know, there will be some people from Mastermind there as well. So, yeah, that's it. That's exactly it, Henry. You're spot on. Let me just make sure I didn't miss anything. Erica said, I'm happy to join Trading Live as well. Okay. Perfect. All right. So we didn't have a whole lot of trades come through today. Let me go ahead and bring up the trade from Amelia. I did not even get a chance to look her trade over today. It's been that kind of morning for me. Let's see. So she did today at 9:32 this morning. She bought to open. Now, I want you to understand something. At 9:32 this morning, Amelia's in a meeting with me. She's doing this trade while we're holding a meeting. So you can trade and work and get other stuff done. It is possible. Okay. 9:38, we were still in the meeting. Okay. So she did 5 contracts of the Qs. She bought the 366 calls at $1.77, right? She bought to open on this candle. We got the breakout, the small pullback and the bounce. She bought on that candle and she sold up here as we hit a resistance level, rolled back over. She sold at 287. So that's $1.10 per share, right? So she's making $1.10 times 100 shares. That's $110 times 5 contracts. She made $550. Let's say the $50 is what it cost her in commissions. It didn't, but this just makes math very easy. If you make $500 a day and you can do that 5 days a week, that's $2,500 a week. If you could do that, and again, we really shouldn't do that, right? So let's just do the way Robert said it was 500 times 252, which is the number of trading days in a year. That's 126 grand a year. Boom. Well, Rob, what if I can only do half of it? Well, then you'd have to suffer with $63,000 extra a year. Some of you can retire on 63 grand a year. No more having to worry about go buy lunch, no more having to get your clothes dry cleaned, gas and or public transportation, depending on where you live and where you work, to get to work. You don't have any of that anymore. I trade out of my house. I work out of my house. My office, we do have an office. My office is an 8-minute ride from my home. That's it, 8 minutes. It's very, very doable, right? Yeah, she's definitely not paying attention to the boss. She didn't bring enough profit for everybody to share. You got it. There you go. A lot of congrats for Amelia. Right? Oops. Okay. So let me take this back off the screen. Guys, I only did one setup today, and it was MasterCard. All right. And I had to wait a little bit on it, but not horrible. We do have earnings coming up. I don't remember if they're confirmed or not, but I think they are. But we do have earnings coming up on them on October 26th. But we've got a 300 level and a 399.26 level, which is our Fibonacci level, right? So we have a blue zone in there. What does blue zone mean? It's a health zone, right? It's an area of health or an area of strength, whichever way you want to call it. Doesn't matter to me. Okay. Excuse me. So we opened up, which was a gap up, and we stretched back down. We bounced when we retest that 300 or 399.26, somewhere in that zone and got a bounce. That is where the trade is taken. Okay. So if we go over and look at MasterCard, right? And we're looking at today. Whoop, wrong. On Omega charts, you hit the plus and minus key, and it makes the chart, longer and shorter time period. For TradeStation, you need the up and down arrows. It's always a game to remember which one is which sometimes. So you can see the first 5-minute candle. There's the 400 level and the 399.26. Looks much bigger, space-wise apart. But again, we're talking about 75, 74 cents. It's very tiny. In reality, it's just movement. Right? If we switch over to 1 minute, come on, what happened? MasterCard. All right, so we're at ones now. So go back to 1 minute, and let's go back to the beginning of the day today. All right, I got to go the other way a little bit. There you go. Trip said MasterCard is confirmed 1026 before market, right? So we opened up right at that 400 level, just about 400 level. We stretched down, came back up, closed down on the first candle. We gapped slightly up and had a really nice rocket to the upside, right? We pulled back. You got a quick gap in there. We pulled back, closed here. There's the bounce, folks, right there. That bounce came in at 9:39 this morning. We go back to a 5-minute chart. That 9:39 happened on this candle, okay? It happened right on this candle. We had this sideways, very ugly, not much happening in there, right? Method. And then we got the core movement that I look for, which is right here, right? We get over, we start to run out of steam. We had big candle, big candle, big candle, little one, big one. It's kind of that big candle is almost a hint, an indication that you better watch it. Something's going to happen here, meaning we're looking for a shift. It's the bulls trying one last attempt after a couple of smaller candles. And we had a few more small candles after that. And we got the rollover, and then we got the rollover, and we're out of the trade. All right. So overall, a move from about 400 to about 404, 403, 404, somewhere around there, right, was a fantastic, I don't remember the exact time, Erica, but it was right in here somewhere. No, I didn't get down this far. I don't think it was this far. Maybe it was. I would have to go back and pull it, and I don't have that system open because I'm on TradeStation now as the practice platform. All right. So that was it for today. When you look at SPY and QQQ, here's SPY. I didn't take it. I saw the breakout, and I looked at the R1 to R2 ratio, 435 to 436 and a half. So it was about $1.40 in there. I didn't feel confident in it, and I missed it. Should have taken it, but I missed it. Just space on it, basically. Okay. So make sure I get all of them. All right. So let me see. Let me take this down. Well, actually, let's just pull this back up here. Yeah, and the same with the Qs, guys. Sorry, Brenda just said that. Same thing for her with Qs. You got the move up, and I just missed this. I was involved with something else at the time, and I'm watching SPY instead, and that bounce off of the pivot was pure perfection. I mean, the pivot was 366.76. My low on this candle was 366.79. 3 pennies, 1, 2, 3, 3 pennies higher than that line. The next candle, we opened up at 96. So we're talking 20 cents above. And through that move up was the entry in the candle. First exit at the midpoint, second exit just shy of the top. Altogether, life is good. Yep, PK said the pivot was great for the Qs. I just missed. And remember, I'm in meetings at this time. I'm watching this on my computer as I am in my meeting. So yes, that is what I have to contend with, and that is why Amelia trades while she's in there, right? I want her trading. Sean, who works in our office in New York, sometimes he works a lot out of his home now because he's moved upstate New York, but he does come down every week to work out of the office a couple of days. He has a trading system set up right in the office. He's got 3 monitors and his laptop plugged into it on top of the 2 27-inch Apple monitors he's got there for work, right? For doing his job at Wealth Builders. And he's trading all the time on those computers, right? Do your work, do your trading. Yes, I want you to trade. Yes, trade, please. Excellent. Okay. So let's go take a look at the S&P 500. We'll do a quick synopsis. Who the heck's making noise outside? There's a lot of lines on my SPY, my SPX chart right now. I mean, a lot of lines. We have this overall bullish uptrend that's taken place. 1, 2, 3 equally spaced lanes on the highway, as Ryan calls them, right? And we did come down, pierce through that, break back up, and we have played nicely off of that line, okay? This line was drawn. This bullish trend line was drawn before we ever broke down here, right? I knew exactly where that line was before we ever broke. But when we hit a bottom like this and started to bounce, I wanted to see how close we were to it, and we were, spot on. It just, that intersection happened, fairly close to a fib line from something that started, almost a year ago, the move. All right, the move. So if we look deeper now at what's going on, we've had a nice bullish, movement overall from the 6th of October, right? Good move up the next day, the next trading day, pull down on Friday. Today we gap up a little bit and we run. But right now, what are we looking at as, I don't know, issues not the right word, but where are we focused? And we need to focus right now on those tops that are in there. That topping pattern right now is what we have to break out of. My last week when we were down here, and I said we need to close not only above the 21, the green line, but we've got to get above that fib line and ultimately above the 100-point level as well, but at least get above that fib line. The 55, I'm not really concerned with the clearing of it or not. I don't use 55 in that way. Okay. So we did get above the 21. We did get above the fib line, but now we are stuck at that 55 hash, the highs we've had in the last 5 days. We're kind of stuck there. So I need to break out from there. Well, if it breaks out from there, does that mean take a bullish entry? Well, now you got the 4,400 right above your head. You see, the signal of the breakout coming in from there is wonderful, right? To break out above the fib line. But now you see why that next level is an issue. And then if you decide to take the trade from there, you see why the next level from that can be an issue as well, right? And I'm talking about that 100-point level. It is going to cause havoc. It's that obstacle course, right? It's junk on the road as you're trying to drive, right? And you're driving around the down tree and around the wire that the tree took down. And, ooh, there's a kid's bike there. Is there a kid laying in the street too? I hope not. God forbid, go really slow. It's just, you got all this stuff happening around you and it's really messing with your head, right? Which, by the way, you are going to see a bunch of shorts and or video stuff come out where we're going to talk about some more mindset stuff and things like that. Simple things that most people don't realize what it actually represents, right? 18 minutes a day. Do anything for 18 minutes a day, and a year from now, you'll have more knowledge and experience in that thing than 95% of the people in the world. For 18 minutes in a day for 1 year, right? For 1 year. So you can't do it in an hour. You can't do it in a week. You can't do it in a month. 18 minutes. What does that come out to? If it's 20 minutes times 7, 130 minutes, so an hour and a half a week-ish, right? To become an expert at the end of a year. All right. So we've got to get above that fib line. I'm sorry, the horizontal line. We got to get above the 100-point level. And then we may be too far away from the fib. We've got to be careful, cautious, careful. I couldn't get them out. Right. We've got to be cautious there. Now we break above. I'm not trading the SPX per se. I'm going to go look at Apple and Amazon and Google and Booking and Chipotle and Goldman Sachs and MasterCard and NVIDIA and Netflix and Tesla and WD, United Healthcare, and whomever else is on my list, right? That's where I'm going to focus my energy and my effort is when that happens. But we truly have to get above that level. Any entry into a bullish trade or a bullish entry taking place now, right, based on this, needs to be peppered with the fact that we might not have broken out yet. So if you're looking to do that, so we're in a neutral bias right now. So if you're looking to take a directional trade, and I'm not saying you should not, you make that decision. But if you're looking to take a directional trade, it might make more sense if you kind of cut back on the number of contracts a little bit. Instead of doing a full allotment, maybe you do 1 or 2 or 5 or whatever, a smaller number of contracts. We call it an aggressive trade in power option plays, where we do 4 contracts versus 10, right? It's an aggressive entry we're taking there, okay? And we do that for a reason. Right? So because we still want to participate, but I really don't want to put a whole lot of money at risk in the trade. You want to take a chance. You can always add to the trade later. And if it moves too much and you can't add to it, so what? You're fine. You're fine. There'll be another trade. Today, I don't know today, but you'll get another trade. I promise you. You will never, ever, ever run out of trades, I guarantee you. And that is the only thing in the world I will ever guarantee is you will not run out of trades. There will always be another trade to take another day. Don't worry about that. All right, so there we have S&P 500. About that. I am on about 90 ounces of water already today. So I am on a big, huge water kick right now. So about 90 ounces I've gone through today, and it does dry my lips. So what are we looking at then? All right. let's go do this. Let me bring up a notepad. All right. And it's going to be, once I start this, it's going to be difficult. Oh, you know what? Let me not do that. Let me try something else instead of this. As I say, it's going to be difficult for me to remove anything once I start it. Here, let me just take that off. Let me go and do a new PowerPoint instead. Let me try something. Come on, where's my mouse? Oh boy, what a hard time it's giving me. All right, so I am actually going to bring over the full PowerPoint here. All right. And this way I can draw boxes and things like that on there and not have to worry about what's happening. Okay. So you've got two different methods, and we'll focus on this, or call this the trading entities decision tree, right? Because you've got some decisions to make on what you want to do. When you look at it, how are you able to, or what ways can you possibly trade, right? So as a trader, it could be personal, right? You could trade as an S corp. You can trade as a C corp. I'm just going to put LLC. There are multiple types of it, right? You could trade as a partnership or as a sole proprietor. I'm going to just put sole P because proprietor is not a word that's in my language very often, right? But you could trade as a sole proprietor, but I don't really find that the only reason sole proprietorship exists is so the IRS can track you. That's it. You're better off making it a corporation. And the double taxation stuff and all of that, you've got to talk to your accountants about it, folks, but I don't believe in that. I don't prescribe to that or subscribe to that. I don't believe that exists the way that it's, if you know how to handle it, it doesn't. Okay. There are things that you can do. So personally, I have S corp, I have C corps, multiple, I have LLCs. All right. So I have multiple entities that do different things. All right. So if we look at, come on, baby, just give me a duplicate slide. How hard can it be? If we look at a structure, okay? If you're trading personally, right? If you're trading personally, you run into some issues of what you can and cannot deduct, right? There is no carry forward of deductions. You can on losses, right? You can carry forward, but again, you need to check with your accountant on this. There's no carry forward on deduction. And I'm sure carry forward, is that really supposed to be one word? There's no carry forward of deductions, okay? There are a minimum number of deductions you can take. You can take some, I should be right. I know how to spell deductions. Right? But you cannot take anywhere near the number of deductions you can as an entity. What I'm talking about, as Brenda said, what does it mean carry forward? If you have a loss at the end of the year, it's gone. If you spent, you bought a $2,000 computer, you spent $1,000 on subscriptions, you spent $1,000 on other stuff, you got $4,000 in there, and you did no trades that year, made no money to offset it against, then you can't carry that forward to the next year. It's gone as an individual. Okay. You can't do that. Right. And there are things such as when it comes down to an S corp, right? An S corp is basically pass through. Pass through income. Okay. What does that mean? Means you fill out an S corp tax return, and let's say on the tax return you show a profit of $1,000. You're not paying the IRS and or your state, if your state has state tax. You're not paying either one of those the taxes it's passing down to your personal tax return and you pay it there. So there is tax, but it is not happening on your personal form. Okay. You also can't carry forward losses. All right. So, and again, there are some things you can, but you check with your accountants for it. But this is not a C corporation where you can carry forward forever. There are people that start entities with absolutely no intention of ever using them. They've got ways of putting expenses into those entities that they don't write off elsewhere. And all of a sudden, an entity they started 5 years ago has $100,000 of deductions in there. Now they go ahead and put that up for sale, and they sell this XYZ corporation that they paid $500 to start and a couple $100, $1,000 for the last 5 years total to manage it, let's say. And now they say, go ahead and they offer a company for sale that has $100,000 of deductions that you can write off if you buy that company. And you could get away with that 100 grand of deductions if you just pay me $10,000. Well, duh. From a business owner, I'll take 10 grand and spend that to get $100,000 of deductions, assuming they're all legit and what, right? That it is a real deal, right? So there are companies that do just that, okay? Yeah, I didn't even get to that, Robert. You're right. And I missed it because of the question I got. So thank you for that. So the biggest caveat here for the personal is no education deduction. Unless it's your field. You cannot work as a florist. You cannot work as a florist, okay? And say I need stock market education to do my job as a florist. I'm not talking about owning the florist. I'm talking about being a florist. You can't work in a grocery store. You can't pump gas. You can't be an auto mechanic and say you need to know how to trade the stock market, because you don't. If you're a stockbroker, if you are a financial advisor, if you are maybe even a realtor, depending on, and that one kind of skirts the line a little bit. Again, check with your accountants and tax advisors. But for sure, if you're a broker, an accountant, you can use your stock market education as a deduction in your own name, right? I still recommend that you are set up as an entity and not as an individual. Pass-through is more of an informational return. Yeah, there you go, Robert. Exactly. So Jeff said there is a way to close a corp if it has losses. I did that for a corp I had and restarted a new, took the loss on my personal up to the loss, down to the corp I closed. Yeah, there you go. And again, look, so Jeff's been with me for many, many years. I've known Jeff, right? From way back when he was in the DC area. And now he's on the other side of the world where it's hot and sandy all year long in Arizona. But you can't take deductions as education expenses. As a business, you can. All right. So the biggest disadvantage to an S corp is it is pass through, right? And that well, not the disadvantage. Sorry, that's not a disadvantage. The biggest disadvantage is you can't carry forward the losses. If you have a C corporation, you can carry forward losses, right? So if we look at, let's duplicate this slide one more time. Let's do this. Let's get rid of this. And let's duplicate it once more again, just so we've got it there. All right. So now if I say, all right, let's put a text box in there. Let's say this is your business, right? That's your business right there. I'm just going to want to make this where it's an actual box that it stays. So let's go ahead and, I think it's style. No, it's not style. I got to go to format, I guess. Format shape. Right. Line, solid line. Right. I don't like blue lines. They're not dark enough. I like black. I wish I could make it stay that way. But this is your business. Okay. This is how you are structured right now as a business. Let's get rid of this. Okay. Right now. And let's say that your business is a business that has a few different aspects to it. And what I mean by that is your business has, of course, you do sales, right? So you have product that you sell, okay? You have trucks that you deliver. You have equipment that you own, and you have real estate, or real estate we'll call it. You have real estate that you own. So you own the building, you own the equipment, you own the trucks, you own the product. An unsuspecting individual or a suspecting one finds out you've got these assets because they're public knowledge for the most part, unless you've structured it properly and kept your name off the entity, decides to, or by accident, whatever it is, falls down on your sidewalk outside of your building. They could sue you for your product, your trucks, your equipment, your real estate, your sales, everything in that entity they can sue you for. Instead, you can go ahead and you could set up your business, let's say sales, say your business sales, you could set that up as its own entity. And maybe not the best one for me to have done first, but let me just go through this and you'll see why. All right. So now we're going to come over here and we're going to put your trucks into its own entity. We're then going to come over here and we're going to put your equipment into its own entity. And then here, we're going to put real estate into its own entity. All right. So what have we just done? We have now set up that your business has a direct line connection to each of these. Can't do that in this program, Rob. It has a direct line connection to each of these, but there is a veil of protection around you for it. Yeah, but Rob, I got 5 businesses now. That means I've got to do 5 tax returns. Get over it. That's what accountants are for. That's what they, oh, but you know how much that costs? You're thinking about the wrong thing. Wealthy people don't ask, what does it cost me? They ask, what is it going to make me? Right? And when I show you the next slide that we're going to go through, that I'm going to put together for you, like I've got it all planned, right? When I show you the next slide, you'll have a good understanding. And again, I'm not an accountant. I'm not an attorney. You need to get their advice on all this structure. This is just thought process for you to think, how can I make something like this fit into my life? Okay. Big question there for that. Deborah, I do have an accountant that handles my paperwork. I have a bookkeeper that deals with my stuff. I try not to do it myself wherever possible. I just have to do all the final touches, and the management of tying some different entities together is where a little bit of my time gets spent. Okay, so I'm going to actually move this box out of our way for now. Okay, so let's say for argument's sake, I'm going to give you some income here, and I'm going to say that your income is $250K. That's your income. Okay. Now, if somebody sues you because they fell on your sidewalk, well, guess what? They can come after and sue you for the real estate because your business doesn't own the real estate. Another entity does. They could sue that entity. They can't sue you. Maybe they could try to attach to your business, but they can't come after everything that's in your business. Wait a second. You fell on a sidewalk. I pay rent, and you are going to literally pay rent. You're going to have a separate bank account. You're going to have a separate entity. You are going to write a check or do an online bill pay, however you choose to do it, but you are going to make payment to that other entity. Okay, you have to do that. So they fall on your sidewalk, they sue you, they could sue you for the real estate. Your trucks, right? If someone gets hit by a truck, they could sue you for they can go after you for your trucks. They can come after you for your business unless you hire an outside trucking company to do your deliveries, and it's not your fault. You can't tell me that if I go and hire, a trucking service to deliver something and they get in a car accident, it's my fault. No. I'm hiring this trucking company to make my deliveries, so they really can't come after my business, which means they also can't sue for my equipment. They can't go after my sales. They can do nothing. Nothing. Actually, I'm going to make it $200,000. Right? Because realistically, this probably doesn't belong here. Right? Because it really is here. It still is an entity. So you've got your trucks, your equipment, and your real estate. Right? So you open a different entity for each of them. Which type of entity? Yes. State's going to matter. The rest of your financial portfolio, your life, is going to matter how you set them up. My real estate holdings are in pass-through LLCs, right? My equipment might be in a C corporation. My trucks might be, and I don't have trucks. I don't have equipment. All right? I'm a stock market education company. We don't need that stuff. Okay. But we have separated our vehicles out of the mix where they're not in with our regular business. So go ahead and sue. There's nothing there. Okay. So each of these are set up and structured differently to protect you, that they can only go after the one component of your business. God forbid someone's in an accident, you are not getting crushed with having all of these different expenses, right? Or these different places that you can get attacked on. And now you can actually and will actually pay some of that $200,000 to each one of these three entities. You're going to have to give some of that to them every year, which means you, as the business owner of your business, right? And you are the business owner of the other businesses. But remember, when I say you're the owner, you're the shareholder. The owner is the entity, right? The entity is key. Okay. Now there is some things about entities, right? When it comes to S corps, as an example, if you're the only name on that S corp and you die, God forbid, the corporation dies. Liquidation, transfer assets, whatever it is. Okay. So you should always have, if you trust another person, like my spouse, my wife's name is on everything, right? We're co on everything, right? I even give her president, secretary, treasurer, and board of director, the chairman of the board for every one of our entities. Okay. She can have it all. I don't care. I'm vice president. That's all I want to be, is the VP. I don't need to be number one. I may need to be number two. I'm good for second in command. Okay. But any other entity, you do not have that issue to contend with there. All right. Just on the S corp. Right. So you've got your trucks, your equipment, your real estate. Now we look at income. If you take your income as an individual, right? Let's go back to insert. And let's say that you made $100,000 of income. Personally. Okay. I don't know why I hit the question mark, because I didn't want that. Copy paste. There was no duplicate, Rob. I think there. Business. Right? When you think about it, and I don't know new tax brackets, what they are and aren't. So again, check with your accountants on this, but you're looking at about $30K in taxes. Each person's scenario is different. When I just filled taxes out this week, remember there's that $10,000 law of the maximum you could write off for your taxes. Our property taxes where we live are much higher than $10,000. I have other entities that have property, right, or other houses that we own that are in our own name because of the way we own them. It's just the way it had to be. I can't write any of that off, right? So I'm limited to that, right? Putting in an entity that is not passed through does definitely help, okay? So you get about $30,000 in taxes, right? And what happens when you make money, right? You work, right? You pay taxes, and then you get paid. That's the process. You work, you pay taxes, you get paid, right? Income for a business, you sell something, whatever that is, okay? You get paid and you pay taxes on what's left over. What does that mean? Well, if you're paying taxes, you know what, let's you know what, let me make it easy and let's just say 50 grand. Okay. So 50 grand, you're going to owe about 15,000 in taxes. Okay. Same 50, whatever you made in the business, you're making personally, right? So 50 grand. You pay tax on what's left over. Okay. So what does that mean? Right? Well, as an individual, we know you paid 15 grand in taxes, but if your tax bracket, if you are in a tax bracket under $50,000, I believe it is. If anybody in here is an accountant, you can help me confirm that. But if it's under 50K, you're at a 15% tax bracket. And I know Bidenomics has changed some of that. And I don't know exactly what it comes out to right now. Okay. But you're at 15%. So if you take 50 grand times 0.15, that's 50,000 times 0.15. That's 7,500. So you're paying 7,500 in taxes. Why? Because you were set up as a business. You paid all your expenses first, and then you got taxed on. Actually, no, that's not true. That's a lie, Rob. Hold on. If you made 50 grand and you paid 15 in taxes, your take home would be 35 grand. That's your take home. Well, if you got 35 grand to spend, right? That's what you had as take home. I'm going to put my take home as 35 grand. All right. Now we're going to take $35,000 times 0.15, 15%. We'll just call it 5 grand. It's 50, well, we'll put the whole number, 5,250. You've got $5,250 in taxes you're going to pay versus the $15,000 you pay as an individual. If you can get your boss to pay you as an entity, I understand there are things you give up like 401k match, healthcare, things like that. You've got to put all that into a consideration, right? But there is a tremendous difference when it comes to how people are taxed as a business versus how you are taxed as an individual. When someone says it's not right that Warren Buffett pays less in taxes than his secretary, all she needs to do is open a dang business and she could pay less taxes too. I want you to write this person's name down, Leonard Hand, H-A-N-D, Hand, right? He was a New York State Supreme Court justice. One of his speeches on the Supreme Court steps, his phraseology was basically, you can go listen to it exactly, because there are recordings of it out there. It is within your God-given rights to take every deduction you can within the confines of the law. In other words, there is no, I don't want to take that, right? You can take every deduction within the confines of the law. You just have to know ramifications. If you know there's a high probability of an audit because of a deduction you took, even though it's illegal, do you want to take it? And that right there is where you get into home office deduction. It's very shaky road. My accountant / attorney is like, nope, don't do it. Don't do it. So Robert said, maybe your business has 10% ownership in your real estate, or it's just it's a management agreement, Robert, is all it is. And this goes back to what we talked about here. Gwen, I think you brought it up as far as your business. Could you then have another entity over here that was a management company? Oh, really now? Yes. Where the account is in your name, Gwen. But you pay that company for every either trade they make, a percentage of the profits, both. Just like a hedge fund. Hedge fund gets, a percentage of your profits plus 10 or 20%. They get 10 or 20% of the profits, plus a 1 or 2% account fee every year. And they do that quarterly. So if they're getting 2% a year, they're taking 0.25% every quarter. So if you got 100 grand in your account, they're going to take 1/4 of 1% every year as a management fee on top of anything they make for you. That 100 grand went to 110 grand. They're going to get 10 or 20% of that $10,000 or $20,000 that they made for you. Okay. You can do a guaranteed payment each year, Robert. Exactly. Leonard Hand. Exactly. Erica, that's who it is. PK said, so if you have multiple rental properties, is it better to have each one as a separate business? And the answer to that is maybe, PK. You know, if you've got properties that are in a lower cost area that maybe you could buy the house, you know, I've got properties in Buffalo, New York. When we bought properties up there, I could tell you that one of the properties we bought were 50 grand. We're talking 2015. Okay. One of them was 50 grand of the portfolio we bought. There were and many of them were under 100 grand. None of them were over 200 that we bought. None, not one. So do you need to put a $50,000 one into its own entity? Probably not. But you'd want to work with your accountant and your tax advisor on that, because you want to put, we have a 4-family house in Queens. Do we want to put that in an entity with a rental property somewhere else and that's a $50,000 property? The answer is hell no. Hell no. I don't want to do that. Why? Because if somebody falls on the $50,000 house, they could sue me for a $1.8 million house in Queens. No, I don't want to do it. I don't want to do it. And they love people like us. There's no debt on the property. Well, at least not traditional where you would see from a bank. There is debt, but it's not that way. PK's, let's see. Robert said, don't forget under personal, the last line is spend the leftover. Exactly. C Corporation used a flat 21% to be the lowest level on the C Corp. It was 15. Okay. And Robert said, it could be wrong. That's what I said. I know it's changed. I don't know exactly what it was. PK said, I have heard through the years you set up the corporation so they pay for your automobile that you drive, the clothes you wear. If it's true, is one of the corps better for you? So clothing that you wear. See this shirt, PK? Wealth Builders. This is a uniform. I can't go buy a suit and say it's a uniform. The IRS doesn't like to hear that, oh, you bought a suit, even though you're going to wear one to work. You could wear it personally also, so because it could be dual use. Now, there are some ways of sketching around that. Attorneys have told me that you can, inside the garment, have your company's name stitched inside. One has to see it, but see it's company property, blah, blah, blah. Okay, okay, maybe. When it comes to cars, yes, but again, you need to have a business purpose for the car, right? So as long as you have a business purpose for the car and that's all you're using it for, then yes, right? So be very cautious not to get caught on the wrong side of this where you are getting in trouble, all right? Brenda, Leonard Hand was the Supreme Court, New York State Supreme Court Justice. His speech that was on the New York State Supreme Court steps was what I'm referring to. Robert said, also depends on what you're worth. Value minus debt, if $250,000 house, $240,000 mortgage, right? And my shirt is advertising. Exactly, Robert. And I promote your shirt as well, exactly, because you could buy the shirts. Cars in trading from your home. No. So I don't agree. If you're going to trade as a business and you want to set that up as a business, that's it. Because what reason would somebody, if it's only a trading management company, they do nothing else, what reason would somebody ever have to sue you for that? Nothing. Put it in the same entity as your trucks. Put your brokerage account in the same entity as your trucks. So you just have one entity and your brokerage account is in there. That's fair game. That's cash. Liquidate, baby. Liquidate. All right. Here, I just wanted to do one more real quick. I know we're getting long in the tooth here, guys, on time. But I want to talk deductions. To me, one of the best, and I wrote best, but one of the best, it's called the Augusta Rule. I think I spelled Augusta right. If not, you guys can fix it. The Augusta Rule or the Augusta Law, right? If you search that, you'll come up with it immediately. I forget the IRS code. I do have it written down. It basically says you can rent your home 14 times a year, means 14 days. It could be 14 days in a row. It could be one day a month, however you want to do it. 14 days a year you can rent it out for a fair value comparative to other places that are equal to yours. And what I mean by that is you can go to a hotel, right? Because most houses are not going to rent you their house for a day. You go to a hotel and say, you know, Hilton, Marriott, whomever, the nicest hotels in my area who I'm compared with, right? How much would it be to rent a room, right? I need it for the full day. I need it for day and night, right? I needed it at 7 o'clock in the morning. I need it till 7 o'clock at night. You've just prevented them from renting it a second time, so they may be charging you double for that. I want to have equipment in there. I'm going to need a laptop. I'm going to need a projector. I'm going to need an overhead screen. I'm going to need an overhead, writing device. I need slides, markers, whiteboard. Let them give you a quote for all of that, right? You do that 3 different hotels. Take the average of the 3, and again, talk with your accountants about this. You take the average of the 3, and that's the potential what you can write off. So let's say that you're able to get $2K a month. I'm just making it up, guys. 2K makes an easy number for me, right? 2K a month. Right? That means if you could do this 14 days a year, that's $28,000, right? That's $28,000 a year that your business gets a deduction for. And you, as the receiver of that $28,000 a year, not only don't you have to pay taxes on it, it's not income. You're not even required to report it. That is how powerful. There you go. I knew someone would jump in. It was Robert. 280A is the code with a question mark. And he wrote, do not exceed 14 days. Correct, because if you do 15 days, you're a landlord, and every penny of it is taxable. Every penny of it is taxable. Don't be greedy. I had a doctor in New York at an event, and he said, my wife and I have 5 houses. Can we do this with 5 houses? The answer is no. You can do it with 1, right? Hey, guys, listen, I have a doctor's call that I've got to take here, so I am going to jet for now. Listen, I hope this was helpful. You guys have a great one, and we'll catch up again. Bye.